Traders War Room wants to thank the viewer for their continued support on this journey. Please take a look at the description for an overview of video content, also some research topics, and some options for online brokers. What is up, team? Hey, it's Chuck, Traders War Room. Listen, another week in the books, all right? Still in the field, still making moves, shaking and baking with this market. It's up and down this whole week. We had Biden's inauguration. We had a lot of sweeping things come off of his first day in office. A lot of things up and a lot of things down. It's getting nuts out there, okay? Today we're going to talk about training principle and specifically how it deals with experience in the stock market. I think you're going to enjoy it. So if you're ready, follow me and let's go to war. Traders War Room reminds the viewer that this channel and content on the channel is for entertainment and education purposes only. So recapping our research and learn from last video, we talked about the RSI indicator. I'm going to go into a little bit of RSI indicator in the main video of this, but I wanted to talk a little bit more. So after this short video, you're going to see some charts and they're going to have some different RSI categories. I want you to look at where the numbers lie, specifically in between the 70 and the 30 range. Remember, when the stocks are below 30, we're thinking that these stocks have oversold. Now, if it's a good stock and a good company and a good business, we might be looking for a reversal to break out and come back up. Again, if it's over 70, okay, the stock was overbought, okay? Now, it could continue going up, dip a little bit and shoot back up, but again, that comes to what type of stock it is, the news behind it, what happened with it. And I want you to look at the different examples of RSIs from different stocks and see the difference in where the RSI level is at and where the top chart was pointing to the price action, okay? Take a look at this chart, AMC, at the end of the market. Notice where the RSI is at, around 50, and then at the end, look at the price all the way up there at above $3. Now take a look at AMC again from an earlier period during the day. The RSI is the same, but the price is lower. This is because RSI is based off momentum within a certain price range. It's not based off of the price itself. Finally, let's look at the RSI sitting at 40 right before the breakout and the price being hovering right there around 285. Then all of a sudden it shoots up. Notice that the RSI continues to be above 70 after a short period and then kind of settles down into that range right below 70. Alright, welcome back, team. So listen, when we're talking about training, specifically experience and how it relates to the stock market, we're really talking about new traders versus experienced traders and what is the difference, okay? And I wrote some notes down that I want to talk about because there's many things, but I want to dive down into about 5 different things, okay? So number one, the first one I want to talk about is time, all right? Dedicated time to the stock market. Listen, experienced traders spend hours, if not days, weeks, months, whatever, over a period of time just going over and over charts, stocks, analysis reports, entry, exit points, everything, okay? That is one of the key things between a beginner and an advanced trader is their dedicated time to the stock market, okay? Listen, if you want to trade penny stocks or short, quick money plays and stuff, you have to be dedicated to watching the stock market and watching the charts, all right? Otherwise, you're going to end up coming in high and holding heavy bags for a long period of time, all right? If that's not your style, then you may just be more of a growth and a value investor, where you invest some money, you let it sit, and then come back to it occasionally or over time just to check in the progress and see where you're at in, a month, 6 months, a year. Okay, next thing on my notes I want to talk about is realistic limits. Okay, so example for today, right? Moving off of that electric truck investment, right? Shaking and baking between 1030s, 1040s, booming up to high 11s, and sitting back in the mid 11s, right? Okay, realistic expectations. Will Ford boom up to $20 next week? Maybe, but most likely it's going to dip come Monday, and then it's going to ride the trend and see if it comes up a little bit and kind of hover around maybe that $11.50, $12, maybe $13 range. Okay, we need to have realistic expectations when we're talking about it. Now you see some of these penny stocks, they're 50 cents, and all of a sudden boom, they explode up to $2, $3, $4, $5, right? Okay, those supernovas do not happen all the time. When they happen, hopefully we can catch them and ride the wave, but we need to remember that what goes up must come down, and eventually those are going to come crashing. Okay, next thing I want to talk about is focus. Okay, we need to be focused, and specifically that deals with our goals and how our trading style is within the market. Okay, so when we're focusing, we want to make sure that we're trading within our strong tendencies. Okay, if I can't dedicate time to the stock market, I don't want to trade penny stocks and quick stocks, because I'm going to lose money every time. All right, so we need to stay focused on what our strengths and weaknesses are within the stock market, and we need to build upon those, which kind of gives me into my next note is fundamentals and technical analysis. Okay, so with fundamentals and technical analysis, kind of two birds with one stone, right? You got to have these fundamentals, these underlying principles for when you get into these strategies. All right, and you are going to need to research your own strategies based off of your risk tolerance and your tendencies. Okay, so fundamental for me is if something is rising up and it's above their 70 RSI line, I'm not going to get in. Okay, unless there's a huge catalyst, I'm staying away from it. Why? Because it's too risky for me, because I know that it's above 70. Above 70 tends to be overbought, and it's going to come down, in my opinion, eventually. I'm going to try to catch that stock, especially if it's a good one with good news, when it's at 30 or below, or if it's trending down but looking like to reverse and coming back up around the 40s, 45s. Okay, because I want to get it in low so I can ride that stock up. Now, if it's a long stock and it's a long hold or a dividend stock, that's a different thing. We might do cost average on that. But again, that's where our technical analysis comes into play, and we have to look at the stock. We got to look at the earnings. We have to look at the growth chart. We have to look at the past history, performance, and see how these stocks are doing. Okay, we need to remember that with fundamentals and technical analysis, all of these wrap in with dedication of time, focus, and keeping those realistic limits and those realistic ideals when we're getting into the stock market. Thought provoking content. So with the new administration fully in the seat now, okay, making moves. All right, thought provoking content is, what should your portfolio look like for a Biden administration? All right, how does it differ from the policies that President Trump put into play that President Biden is going to now put into play? We also need to remember, thinking about, they got the House and it's a 50-50 Senate. Okay, so this comes into play with some of these policies. Vice President Harris will have the tiebreak. Okay, but how does your portfolio look with a Biden administration compared to a Trump administration? Leave your comments below and let me know what you're thinking about. All right, team, for the research and learn, I want you guys to look up some buzzwords, all right? This first buzzword is growth stocks, all right? The next buzzword is value stocks, all right? And the next buzzword is small cap stocks, all right? Look those up and see what the different plays are for and the different fundamentals behind investing in those three different buzzwords as they relate to the stock. We'll recap it on the next video. All right, team, that's it. Hey, week down, week to go. Got 30 plus members on the Facebook group. Got a few more subscribers on the YouTube channel. Hey, we're making moves, all right? We're doing this together. I'm collaborating with some other groups. We're bringing some good things in. We're doing all the right things that we need to do to be successful. But what we need to do as a team, and we need your help. Like, subscribe, share, join the group, spread the word, okay? We're doing good things out here for good people, and we're trying to make a difference, all right? Remember, at Traders War Room, the stock market, that's our war zone, all right? Stocks and sectors, those are our battles. We're attacking, destroying, and we're going to conquer the stock market together, okay? As a team, all right? So if you're ready, follow me, and let's go to war.